Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Wednesday, January the 27th, 2010. Well, another green body candle today, so that tells us that the buyers have made some net bullish progress on the day between the open and the close, but quite significant that the size of the body is probably about half the size of the previous day's body, and that tells us that the buyers have made less bullish progress than the previous day, and that's not what we want to see as a first time frame uptrend is beginning to develop. This is close to being a spinning top type candle where we have a fairly small body with a shadow on either end and a fairly large shadow, and that's quite an indecisive candle. Having said that though, the market did react to roughly around the 78.94 region when there was selling coming in as the market tried to trade up beyond this previous swing high around 78.80, and certainly as the market traded to 78.85, this area of previous resistance was starting to hold as an area where the sellers started to come in and sold this market off. Didn't sell it off substantially. They've actually closed the market between the high and the midpoint level, which means that the buyers still did close with some form of control, only fairly weak control. They did lose commitment on the day, but there still was a level of commitment that they maintained, albeit only a fairly weak level. So the market has maintained the trend in that first time frame and is attempting to take out the 78.94 region, which is holding as resistance. If the market does continue up in the first time frame uptrend, then obviously we need to take out this area to take out roughly 79, and we do have resistance up around 79.50 if the market does continue trading up around there. If the market does come off, then we have potential support around the 78 region, which coincides roughly with where we had resistance within the flag pattern, and a fairly strong level that's been tested on 3 occasions, almost 4 occasions in the previous 4 candles. So that's quite a significant area for this market. Now the market is trading up above the cloud or the Kumo, so we do have a positive bias to this market at the moment, and also trading up above the Kijun-sen and Tenkan-sen, and we had the Tenkan-sen cross back over the Kijun-sen. Previous they were equal, so that's a fairly bullish sign, and that's occurred up above the cloud, so quite a good positive sign for this market. Both the Tenkan-sen and Kijun-sen are pointing up, which is reflecting some of this upside momentum that the market built up over the past few days, so that's a positive for this market as well. Having said that though, the area around this 79 region is significant resistance for the market, so we do need a decent assault on that, and we'd like to see a solid bullish close up above there for the market to test the 79.50 level. But also we have solid support at the 78 region, so within this range the market will be testing these 2 levels, and we should have some resolution with a breakout of either side.